This is Bradley Jackson with the Tennessee Chamber of Commerce and Industry. I want to thank you all for joining us this morning. We have a very important topic that I know a number of you are interested in, and that is regarding loan provisions of the CARES Act that included a number of loan opportunities, the PPP, the idle loans and other things. And we are very happy to have with us both Colin Barrett, President CEO of the Tennessee Bankers Association, also Daniel Martini, Vice President of Congressional Relations and Public Affairs at the American Bankers Association. But before I formally introduce them, I want to first let you all know that we are recording this so that you'll be able to come back at a later time and watch it. We're going to mute all participants for sound quality, and that we're going to ask that as you have questions, either submit them in the chat box to our speaker or submit them to the administrator to allow Lauren Cecil to answer those questions at the end. If you are a member of the press, this is a closed meeting, and we ask that you hang up now and immediately call the Tennessee Chamber offices for any press inquiries that you may have. First of all, the CARES Act has been a major point of discussion for the business community. And I know we've heard a lot about kind of the loan programs, the lending practices. I do want to first say thank you to all of our bankers. I know that they have worked extremely hard to be a valuable resource for their businesses. I know we've heard in the last few days that Tennessee already is approached, I believe, nearly $5 billion as part of the total 350 as our share of these loans, and that Tennessee's banks and credit unions have been key to helping that happen. So with that said, I'm first going to introduce Colin Barrett. Colin is President CEO of the Tennessee Bankers Association. Previously, he was Executive VP responsible for government relations in both Nashville and Washington, oversight of TBA's education and communication efforts. Barrett joined the Tennessee Bankers Association in 2005 as a membership services director and came to the TBA from the American Bankers Association, where he served 2 stints between 2001 and 2005. Colin, we're very happy to have you. And also, Colin, I'll let you introduce Daniel Martini as well whenever you turn over to him. But Daniel is a tremendous asset. He's well known in a number of circles as being almost an issue expert around everything and anything banking. So we are absolutely thrilled that he has taken his time to join us today and ask questions. Colin, welcome.
Great. Thank you, Bradley. And I will echo that. Having Dan Martini with us today is a real get, because Dan can answer any questions that have answers. And there's still a lot of things that don't have answers. So just to be aware of. Before I get to Dan, because I do want, he's the highlight here, but I do want to thank Bradley. I want to thank everyone at the Chamber. The Chamber continues to be the key leader for our business community in Tennessee, and appreciate their efforts throughout all of this. Tennessee banks, we're continuing to work around the clock to get these PPP funds processed. As you likely saw this morning, the set-aside amount of $349 had been depleted. We're working on getting more funds to that, but I'll let Dan speak to that here shortly. Bradley mentioned as of Monday, we had $4.7 billion over 19,000 in loans that have been processed in Tennessee by the SBA. I do want to be clear. Process doesn't necessarily mean that it's gotten out the door of the banks. So if you're thinking, well, I've got my application in, but I haven't heard back, I just want to let you know the difference on that. I do, for a little bit of a background, I know many of you saw the press conference that Secretary Mnuchin and President Trump did, where they said on Friday, April 2nd, you would be able to go into your bank, you'd be able to process or be able to submit an application and walk out with money. There were 2 messages really coming out at that time, one to the small businesses, but the message to the banks was, we don't have the ability to tell you how to close these loans yet. We actually didn't get direction on that until this past Thursday. So when you think about that, it's a very short time frame to move as much money as has. And I really appreciate the banks that are working around the clock to get this done. As we all know, the banks depend on small businesses, and our small businesses depend on our banks. And we're going to continue to work together throughout this crisis, no matter what the program is, whether it's the Paycheck Protection Program, the Main Street Lending Program, whatever it takes. We're gonna get through this, and we're going to get through this together. I know that there are likely many questions from those on the call, so I do want to get to Dan Martini. Dan is Vice President of Congressional Relations and Political Affairs at the American Bankers Association. Dan has actually been throughout this entire process. We're doing daily calls. He's in contact with the treasurer. He has got more answers than anyone I know, and it's a real treat to get to have him here. So Dan, I appreciate your time, and I'm going to hand it over to you.
Thank you very much. I really appreciate the warm welcome. Thank you to Tennessee Bankers Association and the Tennessee Chamber for having me. To the extent that I can, I will answer questions and do a bit of a Q&A after, but I kind of wanted to do a walkthrough of where we are with the program, with the announcement of funding running out this morning, sort of what to expect moving forward, and then I can do kind of a brief overview, put together some kind of talking points related to, for the borrower on, for those that haven't maybe necessarily worked with their lender yet or are in the process and haven't received funds, sort of what to expect there. So very top line on where we are with funding. As you may have seen about an hour ago, maybe half hour now, SBA is no longer accepting new applications into their E-Tran system, which is the system they use to process these loans for the lender. So as borrower, you get your application to lender submits it to SBA, and then SBA gives them a number associated with that application, at which point your lender then turns around, closes, and funds the loan to you as the borrower. So given that the system hit the $349 billion cap, SBA has decided in conjunction with Treasury to not accept any more applications into the system. So this creates the queue, or doesn't create a queue. There's no backlog in SBA's system right now. So we are still waiting on guidance from them as to how our member institutions should be handling these loans. I would assume it's going to be similar to a situation we've seen with some of the lenders that maybe haven't fully participated in the Paycheck Protection Program yet, where they are accepting applications but haven't been putting them into E-Tran. I would check with your individual lender on that, and please bear in mind that we are awaiting SBA and Treasury guidance on what we should be doing, we being our lenders and member companies, about these outstanding applications that haven't been put into the system yet. Related question I'm assuming we'll get is, I'm a borrower. I submitted my application. My lender has approved it and put it into SBA's system. Will I be getting my funds? Again, that is something you need to talk to your individual lender about. My understanding is the way the program is designed, if there is a corresponding number in SBA, that means part of that pot of money is held for that specific loan. So you should still be able to get your funds. But again, I urge you to talk to your lender. But also keep in mind that it's a very fluid situation, so we'll know probably more in the next couple hours, specifically how we can proceed. Now, since the funding is run out, it takes an act of Congress to add more money into the program. You have probably seen in the news Senator McConnell and Senator Schumer and Speaker Pelosi going back and forth on how this phase 3.5, as we're calling it, should look. Basically, they want to outline the parameters of how they want to get more money into the program. Leader McConnell has said he wants $251 billion, just a clean extension, no changes to the program as is. Senator Schumer and Speaker Pelosi had countered with a list of suggestions and changes that they wanted to see in the program, particularly related to some certain carve-outs for CDFIs and banks and other lenders serving rural and underserved communities. So they are currently negotiating that out. There is a deadline, self-imposed deadline by the Senate to try and get something done today by 3 p.m. That's when the Senate comes back in for a pro forma session. So it's our hope that they actually reach an agreement prior to that time. Then the Senate can pass something this afternoon, and then the House can immediately take it up and pass it as well. If that doesn't happen, if they are unable to reach an agreement, you will see a stall in the program until at least next Monday, which is the next time either body of Congress is expected to come into what's known as a pro forma session. As you may have also seen in the news, Congress is currently subject to the call of the chair, which means they're staying at home in their districts until at least May 4th. There's an option for them to come back in, quote, an event of an emergency. But again, I don't know at this point what rises to an emergency for Congress. This is a very long way of me saying we need Congress to act. I would encourage you to contact your representative and your senator and let them know that they need to fund this program if it's something you're interested in doing. That is not official guidance from ABA, but as a former Hill staffer, that is what I can say right now generally gets people moving, is hearing from their constituency. So if you can reach out to your member of Congress and their staff, I would encourage you to do so if you want to see this program to continue to get funds. So that's kind of a lay of the land of where we are with the funding for the program and where loans may be in the process. What I'd like to do now is kind of take a step back, and for those that aren't intimately familiar with this program or haven't really been doing much beyond thinking about applying, is to kind of give an overview of the Paycheck Protection Program and where we've been in the last almost 2 weeks now since the program went live on April 3rd. So with that, as you know, Paycheck Protection Program is a loan program designed to provide payroll coverage, as well as some coverage on mortgage interest, rent, and utilities for a business. You are eligible, broadly speaking. I know there are a lot of specific and technical exemptions and criteria that may make a business eligible or ineligible, but broad parameters are 500 or fewer employees, or if you meet certain SBA size standards, if you're a 501c3 nonprofit, a 501c19 veterans organization, or a certain tribal concern, you qualify. Additionally, sole proprietors, independent contractors, and self-employed are also now eligible for the program, and there are specific criteria related to them in terms of what sort of payroll information they need to supply to calculate the size of their loan. Broadly speaking, on the parameters of the loan calculation, it is the lesser of $10 million or 2.5 months your average monthly payroll for 2019 or a year look back, depending upon what documentation you have available. Again, that's the broad parameters. Since April 3rd, we've seen repeated interim final rules issued and repeated guidance and clarification issued. So with all of this information I'm telling you now, please check the Treasury and SBA's websites for the most up-to-date guidance there. And as always, that information is the controlling information, regardless of what you may hear from me today. So you have your borrower, you're eligible, you have your payroll documentation, you have your max loan size. What do you do then? You contact your lender. Your lender is the one that is responsible or helpful in processing the application. They will then take all the documentation, you submit a borrower form, which is available on Treasury's website. You sign off on that. The lender takes your application, and this is when the program is live. They take your application, submit it into SBA. They get a corresponding number. They come back to you and then bring the closing documents. So closing documents may be a promissory note, an authorization form, and a lender guarantee. It's stuff that you will work on with your individual lender. For flexibility and speed in this program, SBA has said that lenders are allowed to use their own promissory note and closing forms. So every lender is going to be a little bit different with what type of requirement they have there. From that point on, between approval and funding, once the program is actually up and running, SBA has advised that there should be a 10 calendar day from approval to close window. The point being they want this money to get out the door as quick as possible. So they're trying to limit how quickly you can, or try to limit how long you can delay in accepting the funds and closing. So that's kind of how the program works on the front end. On the back end, which you'll start to see more of moving forward, is how loan forgiveness works, and then sort of what happens with the loan after you get your loan forgiveness. So all loan terms are fixed rate 1% interest for 2 years. Again, 250% of your average monthly payroll, or 10 million, whichever smaller. So you'll have a pot of money there. And then in the first 8 weeks of this program, you're required to use 75% of that money for payroll costs. So payroll costs include employee salaries, paid leave, PTO, et cetera. There's a whole list online available for you to see kind of what is covered in that payroll cost bucket. But Treasury and SBA have stated that 75% of the funds that can be forgiven need to be used for that specific bucket, because it is the Paycheck Protection Program. It's about keeping employees on salary, or being paid. So you get your money, you spend 8 weeks using it, document everything. That's just a tip. We don't know yet what forms are going to be required as part of the loan forgiveness application. We're waiting on further guidance from SBA and Treasury on that. So my suggestion is to keep track of everything. Also talk to your lender. They may have already thought about this and preemptively put some suggestions in for what they may need from you for the processing of the loan application. So 8 weeks go by, you've spent your money, then you submit your loan forgiveness application to your lender. At that point, the lender takes all the documentation, verifies that you did what you said you would do. You've used the money on payroll. You've used 75% of it on payroll. Then they approve the loan forgiveness application and submit that to Treasury. I believe it's within 90 days. I need to go back and check and see if this has changed or will be in forthcoming guidance. But basically within 90 days, SBA remits that money to the lender. And upon the lender approving your borrower application for forgiveness, the borrower gets that money treated as indebtedness, and that portion of the loan comes off. So you then have the remainder of the loan term to pay off the remaining balance of that loan. So in a hypothetical example, you get a $100,000 loan, you spend $20,000 of it in the 8-week period. It satisfies the requirements for loan forgiveness. You'll be left with $80,000 left to pay on that loan back to the lender. So related to that, we are waiting on guidance. We need to see how the specific process is going to work from SBA, but that's the broad parameters of loan forgiveness. One thing I forgot to mention earlier related to sort of the payoff schedule of a loan is you also have the ability to defer payments for up to 6 months. However, there's no penalty for prepayment. So again, work with your lender on the payoff schedule. They will have the individual sort of terms for the 2-year loan that you will be signing with them. So that's kind of the broad back end stuff on the Paycheck Protection Program. Another question that I've received often relates to which loan should I apply for as a business? Should I apply for a Paycheck Protection Program loan, or should I apply for an emergency injury disaster loan, or EIDL, which is a program run specifically by SBA? The terms are a bit different. So Paycheck Protection loans are 2-year fixed 1% rate, and they're capped at $10 million or 250% of your monthly payroll costs. EIDLs, or economic injury disaster loans, are 30-year fixed terms at 3.75% up to $2 million. Now, that program, EIDLs are run by SBA, and they can be used for things beyond just the 5 buckets I mentioned earlier, which, to remind everybody, are payroll costs, mortgage, interest, rent, utilities, and other debt on interest obligations you accrued prior to February 15th. So if you're looking for a specific program, I mean, you need to make that decision for yourself, but there are 2 options out there in the world right now from SBA, either EIDL loans or Paycheck Protection Program loans. Finally, resources that I would encourage you to continue to look at, in addition to talking to your lender, are Treasury and SBA's websites. That is where the information comes up to date the fastest. They haven't been the best about sending out press releases, so I would just check there occasionally, and certainly utilize any sort of association resources you are a member of, whether you're part of, say, the Chamber, which is hosting this call, or if you have any other interest. I know they've been on top of, the U.S. Chamber's been on top of things at the national level and providing resources for the borrower and for their membership. So definitely check with them. But again, in my guidance and everything I've been saying, what Treasury and SBA put out on this program is what controls. So even if there's a difference and you've maybe heard some information from me or from somebody else in an association, ultimately at the end of the day, it's going to be up to Treasury and SBA to administer this program, and they're the ones that set the rules and guidance. So I threw a lot of information at you. This is being recorded, so I would encourage you to go back and listen to it, and also to utilize chamber resources that are available to you. But with that, I'm happy to answer questions to the extent that I can. If I don't know the answer, I will let you know up front, and a lot of these questions may fall into the bucket of SBA and Treasury need to release further guidance. So thank you very much.
Thanks, Dan. That was really a great update. We have a handful of questions that came in, so I'm going to start reading some of them. The first one is, and if you may have already touched on some of this, so I apologize, but at what point or date does your employee headcount baseline start in the forgiveness calculation? In other words, how do you calculate late how many you added or lost during the forgiveness period?
Sure. So the look back period is over 2019. So it would be the average number of employees. My understanding is that the average number of employees for that look back period. The start date of when you see a reduction in employees is February 15th. And then you have to get your employee number back up to that average look back by June 30th.
Okay, and then there's a second, or actually a third question within that one question is, at the end of the 18 months, do you term out the remaining balance of any as a conventional loan with your bank?
So you need to pay off the loan within the 18 months. After the 6-month deferment, the bank should be setting up a payment schedule with you that will make it so you can pay off the loan in that 18 months. If you reach an end and have a balance, that's going to be in a bucket of where we need future guidance from SBA on how to handle that. But it's 100% guaranteed loan by the government. So there's going to be some interplay and some negotiation between how SBA buys back that portion of the balance, or I'm not sure yet what the debt obligations are for the borrower after the end of the 18 months.
Great. Next question. We are being told we cannot apply without a completed 2019 return. Is there anything we can submit instead of a return?
So without knowing additional information, whether that's a business or a self-employed individual, the documentation needed generally is 2019 information. If you're self-employed or an independent contractor and you don't have your Schedule C yet, say you don't have a 1099 and you need your Schedule C, we are still trying to seek additional guidance from SBA on what is available in terms of alternative documentation that they would accept. Because we're running into a situation now with self-employed in particular where they don't have their 2019 Schedule C yet, and they don't have time to get it, or they can't get it, and they want to be able to use alternative documentation. So that's something we're working on.
Great. Okay. Let's see here. Should I apply now? And I'm sorry. Let me start that one over. I do not need help now, but I do not know about the next month. Should I apply now? And what if I am approved and then never need or draw on the loan?
So that's a great question, and we're getting a lot of them now, in particular related to industries that are going to be shut down by respective governors. A restaurant is a great example, where you have all of your employees at home. You're not going to be open for business probably in the next month. And what do you do? So short of clarifying guidance from SBA and Congress even on how to delay accepting funds, my suggestion, and this is just my suggestion, not official guidance, is to delay to apply for the funds when you actually need them. The way the program is currently set up, and with the existing guidance of this 10-day window, is your loan forgiveness clock starts the day you get funds. So if you aren't able to bring your employees back for a month, you don't want to eat into that 8-week window. You may want to consider delaying applying for a few weeks. Again, I would caveat that with, let's see how the funding, additional funding request plays out today. and potentially over this weekend, because that may also determine when you want to apply for a loan, if Congress is going to have these drawn out negotiating fights over keeping the program running. So it's a very long way of me saying it's up to the individual business to decide when they want to apply, but keep in mind that when you do apply and you receive the funds, that's when the loan forgiveness clock starts. So that's a calculation you need to make.
Great, okay. The next question, I'm a small business LLC single operator. Do I qualify for the PPP when my net is a negative, but I have paid myself through an owner's draw? Or do I use my gross sales as income?
Great question. I unfortunately don't know the answer to that specific scenario. Treasury and SBA did release guidance related to sole proprietorships and independent contractors. I believe, what is it, Thursday? I believe it was Tuesday they released that information. So I would go back and look at that. If your question is not answered in there, I would see if the chamber might have resources related to that specific scenario. But from my vantage point, I don't know how to answer that question.
Okay. All right, then. Next question. Is it possible to furlough staff until June 29th, not use the PPP, and then bring them back on by June 31st and use PPP funds to pay them in July and August? In a sense, use the PPP funds to bring them back to work when there is actually work for them to do?
Great question. I think that goes, again, back to my previous answer related to when do you get your funds. As of right now, there's no mechanism in place to delay receiving funds until June 29th if you apply right now. Current guidance says you have to fund the loan within 10 days of approval. Or you, meaning the lender, has to fund within 10 days of approval. So if you were to apply and get approved for a loan now, assuming the system was still online, let's say, you would have funds by April 26th. So you wouldn't be able to delay until the 29th as the rules are currently written. That may actually require a congressional fix because of the way that the law is written. I don't know if SBA and Treasury have the authority to issue guidance saying that you can delay accepting your funds. The intent of the program from the beginning and from my read of it was to get money out now. I don't think the program, and I can't speculate really, but I don't believe the program contemplated the fact that it would be several months before a lot of these businesses were going to be able to get back into the swing of things and open. So that might be a legislative change that's coming. But as the program is written right now, you're going to be getting your funds within 10 days of approval. And that's the point when the loan forgiveness clock starts.
Great. Okay. Next one here. I applied for an EIDL loan directly with SBA and I have heard nothing back. It's been 2 weeks. Do I just need to wait?
For EIDL, I can't really speak to how their delays are going. I've seen some pretty negative press coverage, but if you have applied for EIDL, you probably just need to wait to hear from them. One thing I will mention is how EIDL and PPP work together. You cannot use an EIDL loan for the same funds or purpose you're going to use a PPP loan for. So if you've applied for an EIDL and you're outstanding and you're thinking of looking to get a PPP loan, make sure that you're not going to try to use the funds for the same purpose. So if you want to do PPP and EIDL, make sure that you're using PPP for payroll and those other buckets I've mentioned, but then you're going to use EIDL for something else. I know SBA, in a good year, SBA is designed to handle about $28 billion in conventional 7A loans and maybe a few natural disasters and emergency situations where the EIDL program operates. They've never been in a situation before where you have all 50 states and the District of Columbia under a declared emergency, and you have $350 billion in funding that is cleared in under 2 weeks. I'm not making excuses for the delay of SBA. I wish they were faster, but I know the backlog over there is probably a lot right now, so that might be why it's been a couple weeks since you've heard something.
All right, next question. How are conversations going to modify the 75% payroll requirement and allow more PPPL monies to be used on rent, utilities, and mortgage interest?
Yeah, so great question. That's something that's discussions are ongoing. I don't know if that would require a legislative fix or if it's something that Treasury can do upfront, because they made the determination in their guidance to cap it between 75% and 25%. That's not in the actual underlying bill. So to the extent that that can change, we have conveyed that to Treasury and SBA, but it's ultimately their decision to make a change. If that's something you are interested in, I would encourage you to make sure your national association is helping as well on that front.
Great. Okay, next question. Any possibility of the government changing their mind on the loan forgiveness?
Seems related to the previous question. So I would, again, if it's related to specifically the percentages, it's a change that Treasury is going to have to make. If the question is a broader one related to, are they going to change the period of loan forgiveness, that would require a congressional action.
Okay. Let me just make sure. Okay. What if you bought a business in February? Can you use previous owner look back?
That's a scenario I haven't seen yet. The guidance isn't necessarily explicitly clear on that. That would be a question I would potentially try to get clarification from your SBA district office. I know they're not necessarily the most responsive right now either, but I say that because if you can get something in writing from them about how to do that, that would be helpful for your application moving forward, particularly as we have basically seen all of these loans being made approved, and then a lot of them being funded without full guidance. So there's hopefully going to be some sort of good faith catch-all on the back end, but I'm speculating at this point. So I would suggest reaching out to the district office on that, and then possibly working with your lender to see if they've encountered a similar scenario, but that's not something I've seen yet.
Okay, next question. The SBA is announcing that they are out of money. How is this going to affect current businesses that didn't get their application in before now?
Yeah, so if you are a business that has not had your application processed by your lender into SBA and approved, you're going to have to wait until the funding comes back online. There's not a mechanism in SBA in this program to do anything with those applications until more funding comes up. So I would again reiterate and encourage those on this call to reach out to their members of Congress and say that we need additional funding for the PPP loans.
Okay, great. A couple more here. Is there any advantage applying for an EIDL loan through your local bank or directly with SBA?
So EIDL loans cannot actually be applied for through a bank. It's a program run expressly through SBA. So if you are interested in an EIDL loan, go to sba.gov/disaster and you'll find the EIDL loan application there. Banks are only doing paycheck protection loans.
Great, thank you. So if I use EIDL forgivable portion for rent and PPP for payroll, then would both be forgiven? And then there's a couple of questions within this question, I apologize. For PPP used for payroll, is that just for full-time employees, and how do part-time employees play into this?
Sure, so I'll answer the second question first and then go back to the EIDL versus PPP issue. So payroll can be used to pay for part-time and full-time employees. I believe the forgiveness portion of the application is tied to just full-time employee pay. But again, this is an area where we need specific guidance from SBA and Treasury on how it's going to work. And I would need to go back and look at the specific guidance to date on how they anticipate the use of payroll they anticipate part-time employees in the loan forgiveness application. EIDL versus PPP. idles are not forgivable, to my knowledge. It's a program with SBA. It's a fixed loan that'll have a term up to 30 years at a 3.75% interest rate. That's not forgivable unless that has changed somewhere else. PPP loans are forgivable, but in the specific question that was just raised about using idle for rent and PPP for payroll, that wouldn't be allowed because PPP also does cover rent as part of the bucket of things you can use the loan to pay for.
Great, thank you. Okay, next question. Are farmers eligible for PPP?
Yes, farmers are. Again, size standards are something you would need to consider depending upon your affiliations, but generally speaking, farmers are eligible. One thing I would like to flag for you, if you are a self-employed farmer and you are reaching out to your bank and lender, you may not necessarily have a Schedule C. You probably have a Schedule F. That is something we are seeking guidance and clarification on from SBA. Seems like it was an oversight on their part to not include Schedule F in their guidance. So expect something on that, hopefully in the next few days, basically saying something to the effect of self-employed farmers can submit Schedule F for their payroll cost calculation.
Great, okay. I think this is the last question unless any more questions pop up, but 501c3 wanting to utilize PPP loans, does there have to be a history of payroll to qualify?
Again, not necessarily. It'll depend on what your 2019 look back is, or if you are a newer 501c3, the look back period would be January and February of this year. So again, you would have to look there. Broadly speaking, you need to have payroll costs to actually qualify for this program. If you don't have any expenses, it's a program I don't think that's going to work for you.
Okay, great. Another question came through. For a sub S, can I apply for PPP if there are W-2 wages?
Again, I would need to look back at the specific guidance related to payroll calculations there, but I believe the answer is yes. Again, this is something I would contact your bank if you're using a bank as your lender. I know there are other lenders that are involved in the program, such as credit unions and fintechs too. So depending upon who you're using, I would reach out to them and work with them on the borrower application.
Great. Well, that's all the questions that we've had for now. So I appreciate you and Colin doing this. It was really great information. So with that, I thank you. The Tennessee Chamber thanks you. And I hope everyone stays safe. Unless you have any final closing thoughts.
Yeah, I just wanted to take the opportunity to thank both Tennessee Bankers and the Tennessee Chamber for the opportunity to speak to everybody today. I know this is kind of a weird format, so appreciate everybody bearing with me and taking the Q&A through the moderator. So thank you for that. I know there's a lot of anxiety and frustrations out there related to this program. Please know that ABA as an association is continuing to work to push for additional funds for this program, and our membership is working around the clock to try to fill, process, approve, and fund these applications. So I know you may have not gotten your money yet. You may have had some frustrations and struggles with this program, but please know that the banking community is there to support you and will continue to be with you as we move forward in this process. So thank you very much. Greatly appreciate the opportunity to speak with everybody today, and have a safe rest of your Thursday, and everybody stay safe.
Thank you, Dan. Thanks, everyone. Colin, thank you. I don't know if you wanted to have any last words.
No, I just wanted to thank everybody for their time today, and appreciate Dan joining us as well, and the Chamber providing this opportunity.
Great. Thanks, everyone. Hope everyone has a great day.